morning, traders. I would like to take a look at everything that played out in the room this week and the importance of Fibonacci levels for your entries and for your targets. The entire last week, price struggled at key Fibonacci resistance at bright green line decision point 2. Again, these levels you can use on any day trading chart you can choose to trade. This is your key day trading chart on S&P that you can convert to 1, 2, 3, 4, 5, 6, 7 range. Take any chart you trade. This week, price been opening up since Monday from Fibonacci Reversal Zones, struggling to break through this resistance. On Tuesday 19th, buyers stepped in with vengeance, as this is institutional reversal zone. Exact same thing played out yesterday. Price put us through ultimate torture initially, and then buyers stepped in. What was the problem to the upside? This Fibonacci resistance, again, present in the room since early June. Where price reminding you, if you play by the rules, the sky's the limit. This morning we're monitoring reversal zone very carefully. This Fibonacci resistance did not let buyers through, keeping trader out of trouble. This market collapse is quite a problem right now for day trader, because bias at reversal zone remains bullish. If you choose to short the market right now, this trade has extremely low success rate. Knowledgeable trader knows that. If you look to your left, every single short yesterday, this week, overnight session, bad idea. Shorts are present. Knowledgeable trader not touching them. Knowledgeable trader knows the importance of playing by the rules. If you choose to short market now into reversal zone, your success rate less than 20%. Not the place to short into. Here's a couple of reminders about few other charts, as we are on standby, as this is flawless area for day trader to be. Here what played out on oil this week. In case you missed oil news in the trading room, this was extremely bullish news on oil. What in the world has happened on oil, as this was Fibonacci reversal zone, not the place to buy. How many points did oil collapse from this reversal zone? Many. Oil collapsed from 66.40 area all the way to 64.40 levels. Why? Fibonacci said so. Knowledgeable trader who plays by the rules knows the importance and the reasons I named this level reversal zone. Last week, exact same thing. A little bounce, bullish news, the day of the news, and complete collapse. 400 plus points. No matter what chart you trade, when price comes to reversal zone, your bias remains firmly trend reversal. So, here's oil now at decision point 2. Ultimate Fibonacci target on every single one of your trades when you move your stop outside of break-even. As exact same level where S&P sold off from prior. As exact same level where S&P is selling off from this morning. And this is exact same reminder on other charts. Here is gold weekly. Identical bright green line as on S&P. Everyone remembers that? Gold is heading to reversal zone. Sell-off overextended. Knowledgeable trader will be monitoring for long. At this key support, rules are met, take a trade. Here's another reminder on where Tesla is this morning. This is Tesla chart present in the room for years. Tesla sold off from reversal zone Tesla not far off from reversal zone. Second week in a row frozen in correction. Where did buyers come from? From this key, Fibonacci resistance. Identical formula across all instruments. This is where Apple is this morning. Apple reached bright green line, key Fibonacci target on every single trade, and this is your channel on Apple, between this support and this resistance. No matter what chart you trade, identical formula applies. Identical green line on all instruments. Most important target on all of your trades. So, on every single instrument you witnessed at key Fibonacci resistance, and where S&P is now, is ultimate trend inception. So, if you convert this chart to 1 minute chart, what is an eligible trader paying attention to? This is worthless correction. No reason to buy this market yet. None whatsoever. Knowledgeable trader waiting for the rules to be met. Everyone agrees on that? And that's what we monitored for this morning. Level present in front of you for weeks was a problem at the open as expected. So, all the rules in the course. You learn the rules and you decide what instrument you want to apply the rules to. That's simple. So this is institutional support traders. This is where buyers came from the previous 2 days. If price is crashing through this support, market will start collapsing into oblivion. This is ultimate Fibonacci support. Bright green line once again. Again, where buyers stepped in from since early this week, where every single short into this support had failed. Every single time you take a trade, you ask yourself a question. What is my edge? What is my success rate on this trade? Shorting into institutional support, not a good thing to do. Market crashing through. It's only 20% success rate, not the place to short near. Agree? Identical level as on all the instrument you witnessed prior. Identical resistance on your day trading chart on S&P. So here we go. Market starts moving to the upside. Knowledgeable trader expected that. As I warned you, this is institutional trend inception. Everyone clear on this? Rules are met, take a trade. What is a knowledgeable trader monitoring for? This level to the upside. We need to make sure we are out of the woods. But as I warned you, since Monday morning, trend inception only, not the place to short. So again, this is what's been posted here since early morning. We discussed that at the reversal zone we're monitoring for long. Market becoming interesting. Market starts moving higher as institutional support respected. Key moment on S&P. Surprise, market moved that fast, instantly. Please pay attention to this bright green line as you witnessed on other instruments. Key Fibonacci target. Everyone seeing this? Absolutely crucial. Range charts will be in a boot camp. Everyone clear on the importance of reversal zone and how instantly price moved to the target? This is a key. Knowledge is power. Identical formula across all instruments. Range charts will be part of a boot camp. Your execution and knowledge at reversal zone is a key. And that's all there is. Pure price for entry and Fibonacci for exits. just to remind you, identical level you saw on range chart is exact same place where gold collapsed from. So here's a reminder. This is decision point 2 on Euro Daily. Everyone seeing this? So Euro collapsed from decision point 2 and this is Euro at reversal zone. Everyone seeing this? Euro struggling to break through this level to the upside. Identical strategy as you saw on range chart. Key moment on minute charts. What is important on minute charts? This exact same resistance as you saw on Euro. Identical image. And that's how Fibonacci keeps you out of trouble. S&P in a whole lot of pain on minute charts, struggling at this resistance. No matter what chart you trade now, on range charts it was a key target to the upside. On minute charts, it's a key resistance. Identical to an image as on Euro Daily. It's all the same. Euro is struggling at key Fibonacci resistance the entire week. Here is S&P 1 minute chart. Key moment on S&P. Would be amazing to see institutions stepping in with vengeance on minute charts at trend inception. Again, we stayed out through junk and fluff. We're paying attention to trend inception only at reversal zone, not the place you ever short into. You saw what played out on range chart. Now please pay attention to minute chart. So again, we're discussing with students 2758 is a war zone as we're treating this firmly as counter trend move. Bright pink line is a problem. So here we are traders, we've been sitting at this level for the last 30 minutes. Anyone surprised? Everyone clear where Fibonacci rally came from until this resistance. This is counter trend move. If you are a knowledgeable trader who understands it is counter trend move, it is essential to take profits off the table and move your stop outside of break even, unless you want to sit here 3 more hours. Trailing carefully right now is a key. And again, this is what played out this morning. Price struggled at reversal zone in ultimate bullish correction. Reversal zone is reached, we stay out through fluff. Why? This Fibonacci resistance is present. As we discussed with students, as we discussed in the trading room, this was key moment on S&P. On range chart, it was key target. On minute chart, this is decision point 1, end of minor trend where price had been for the last 30 minutes. Knowledgeable trader respecting this target and moving his stop outside of break even. This is exact same thing as Apple done for over 6 months period. Finally broke through this level until bright green line. Ultimate target. This is exact same thing as Tesla had done recently. Struggled at key end of minor trend for 3 months. Finally broke through. Identical formula in front of you this morning. And again, where did buyers come from is no surprise. Fibonacci reversal zone on your key hourly chart. Everyone clear on this? The only thing that's stopping this rally to drastically higher level is this level. Protecting your profits is the key. Identical strategy on every single instrument. Every day, every time. What you choose to trade, absolutely up to you. Will S&P finally break through this level? trail outside this pivot, will it do exact same thing as Apple had done? Will it do exact same thing as S&P had done on your key investment trade weekly? Do you remember this moment on S&P 2200? Weekly, identical level as on 1-minute chart you see in front of you. Next, S&P skyrocketed to 2300. This is where S&P is now. Identical levels, the only difference. This is your investment decisions. Blasted through, end of minor trend, green line, reversal zone. S&P in massive correction, except its reversal zone key resistance to the upside, to the downside. And that's what we dealt with this morning on S&P. Everyone clear on this? Every day, every time, exact same formula, exact same strategy. What you choose to trade, absolutely up to you. As you can see very clearly, stop moved and trail moved in exact perfect place. No random stop will ever work. No speculative stop will ever work. Price is showing you very clearly where a stop needs to be. No matter what you trade, no matter if it's Apple, no matter if it's Tesla, no matter if it's Euro. Identical levels, identical strategy. Remember this? It's all the same. Key moment on S&P. So look at this chart, pretty please. We've been here for almost an hour. Decision point 1 remains brick wall and ultimate trail respected. As I warned you, it's a counter trend move. If you're respecting this as your key target and protecting your profits, it's a brilliant thing to do. Scaling out accordingly to your account size and your risk management. This is ultimate brick wall. This is ultimate reminder. No matter if you're trading 1-minute chart, no matter if you're trading monthly or weekly, never disrespect this level if you are trading against the trend. We've been here for an hour. First key target is reached. Just like on Apple, just like on Tesla, just like on Euro, just like on S&P weekly. Here we are an hour later. Key target decision point 2 is reached. Trail adjusted even closer. Again, just a reminder. All of this been playing out from reversal zone. Knowledgeable trader who knows it remembers once again, shorting at reversal zone never an option. Do you remember this level that's been in a play the entire week on S&P? What is absolutely crucial? This area next. As I warned you, this is not the place to short. Everyone seeing this? How many points are you up on this trade? How many lots do you trade? If you traded only one lot, you exited at key decision point 1. If you're trading multiple lot sizes, you scale out accordingly. Once again, it is identical level, as always remains your key target, no matter what instrument you trade. Identical formula recently played out on Euro, where Euro collapsed from. Identical formula playing out on Euro now, where Euro finding buyers. The only obstacle remains on Euro is this level, this Fibonacci resistance. And that's S&P now. Identical levels on 1-minute chart. So traders, if you would like to learn the method that applies to any instrument, any time frame, any platform, please join us in Fibonacci Mastery class. And if you're joining now, it is by far the best time of the year to join, as it includes Fibonacci Trading Bootcamp at no cost to new students only. Always the most important event of the year by far, when every single minute I will teach you how to trade pure price indicator free, how to use Fibonacci. This is part of 8-week group and 16-week private mentoring if you are signing up for the course during June and July. I highly encourage you, please review all the information, underlearn, and most importantly, listen to the students, and never ever ever hesitate to contact me. 925-257-4298 or info@fibinstitute.com. As S&P once again reminding you, knowledge is power. Nothing else will ever work, no matter what you do. Day trading this week tested you to the core of knowledge of reversal zone, when knowledgeable trader once again adjust his trail even closer, reminding you your day trading chart doing exact same thing as S&P had done on weekly. The only difference, on weekly it respected decision point 1 for 6 months. On your day trading chart, it respected decision point 1 for almost an hour and then blasted through. So, this is your investment decisions. This is your long-term positions. As once again, S&P respecting reversal zone to the upside. As once again, bullish rally in a progress. Identical formula, only difference, risk management and trader psychology. So, only few spaces left in a bootcamp. After bootcamp, I will be taking a long vacation. Look forward to seeing you in the course. Thank you, traders.